Something big is breaking in the RV world, and it's not just a few overpriced rigs. Dealers are panicking. Prices are falling off a cliff. And what started as a pandemic-fueled buying frenzy is now spiraling into the biggest RV market crash we've ever seen. In this video, I'm pulling back the curtain on exactly what's causing this collapse. You'll learn how the rush to buy during lockdown years created a financial bubble, how dealers are now drowning in debt from unsold inventory, and why auctions are exposing just how far values have dropped. We're talking repossessions, rising interest rates, desperate fire sales, and the hidden dangers waiting inside bargain rigs. If you own an RV, plan to sell one, or are even thinking about buying, this is the video you can't afford to miss. Back in 2020, when the world shut down and people were stuck inside, RVs became the ultimate escape. Travel restrictions made international vacations impossible, and suddenly, owning a motorhome or travel trailer was the ticket to freedom. Families who had never even considered RV life before were lining up to buy whatever was left on the lot. Some folks waited months just to get their hands on a rig. Prices skyrocketed, and manufacturers couldn't build them fast enough. But here's the problem. That explosion in demand wasn't built on long-term fundamentals. It was a panic-buying wave driven by fear, boredom, and stimulus checks. Dealers and manufacturers assumed this surge was permanent, so they overextended, ordering too much inventory, expanding too fast, and hiring like the boom would never end. Fast forward to today, and the picture has flipped completely. The same families who bought into the dream are now facing payments they can't afford. Many RVs that were bought at peak prices are worth far less than what's owed on them. Fuel costs have gone up, campgrounds are more crowded and expensive, and inflation has put a squeeze on every part of life. Suddenly, that dream of freedom is a monthly financial burden people are desperate to get rid of. Meanwhile, manufacturers kept producing at full throttle even as demand dropped off a cliff. That created a supply glut the market simply can't absorb. New units are sitting on lots for months, and used units are flooding back in from leases, rentals, and early trade-ins. The result? A market that's completely oversaturated. This wasn't just a cycle, it was a bubble. And like every bubble, it's now popping. RV values are plunging, sales have slowed to a crawl, and the industry is scrambling to figure out how to unload the excess without dragging everything down further. If you're wondering how we got to the point where prices are collapsing and dealers are desperate, it all started with that pandemic gold rush. It built a temporary fantasy, and now reality is coming back with a vengeance. Most folks don't realize that the shiny rows of RVs on a dealer's lot don't actually belong to the dealer. They're borrowed from the bank. It's called floor plan financing, and it's the secret engine behind almost every RV dealership in the country. Here's how it works. A dealer finances their inventory, taking out a loan for every unit that arrives. Each RV on the lot racks up interest daily, and the longer it sits unsold, the more money it costs. During the pandemic boom, this system made dealers look like geniuses. Units sold fast, often before they even hit the lot. So that borrowed money was repaid quickly, and the margins were fat. Dealers expanded inventory, took on more credit, and grew their businesses assuming demand would stay hot. But now? That same system is turning into a death trap. Sales have slowed dramatically, but the debt hasn't gone anywhere. Every unsold RV is a ticking financial bomb, bleeding interest by the week. Some dealers are paying thousands in monthly carrying costs just to keep rigs parked under fluorescent lights. Worse yet, as RV values fall, the banks get nervous. They're not just charging interest, they're demanding that dealers put up more collateral or make cash payments to maintain their credit lines. And if those payments aren't made, the banks can pull inventory or even seize assets. This pressure is crushing. Dealers who once bragged about record sales are now slashing prices to move stock before the next bill comes due. Some have already gone under. Others are resorting to extreme discounts, bundling in accessories, or turning to auctions just to clear space. And here's where it gets dangerous for buyers too, because desperation leads to corners being cut. Inspections get rushed, damage gets hidden, and that bargain RV you just scored might be more trouble than it's worth. So when you see a dealer advertising rock-bottom prices, remember this: they might not be offering you a deal. They might be trying to outrun the bank. Floor plan debt worked great in the boom, but now it's the chain dragging the entire industry down. Rising interest rates are slicing deep into the heart of the RV market. During the pandemic, rates were at historic lows, and that cheap credit helped fuel a buying frenzy. People could lock in decade-long loans with manageable monthly payments, even on expensive rigs. It created a false sense of affordability that sent demand soaring, and prices right along with it. But now, that era is over. Interest rates have climbed sharply, and the effect is brutal. The same loan that cost $500 a month in 2021 might now cost $800 or more. That change alone knocks a massive portion of buyers out of the market. Lenders have tightened their standards too, raising minimum credit scores and down payment requirements. Financing isn't just more expensive, it's harder to get at all. This tightening credit environment has had a cascading effect. First, it choked off new demand. Then it started pushing sellers to lower prices, trying to attract a smaller pool of qualified buyers. And now it's making it almost impossible for owners to refinance or trade in rigs they can no longer afford. Every payment feels heavier, and for some, the math simply doesn't work anymore. Dealers are also feeling the squeeze. Many rely on their customers securing financing to close deals. When loans get denied or delayed, inventory sits longer, and that leads to serious financial pressure. The entire system slows down, and floor plan costs pile up. For prospective buyers, higher rates mean less purchasing power and more long-term risk. A small bump in rates translates into thousands of dollars in extra interest over the life of a loan. It turns what looks like a good deal into a financial trap. The impact of rising interest rates isn't just a financial inconvenience. It's one of the key forces accelerating the RV market's decline. It reduces demand, increases defaults, blocks refinancing, and widens the gap between what RVs cost and what people can afford. And until those rates come back down, the pain is only going to spread further through every corner of the RV world. Forget the stickers on dealer windshields. Auctions are where the real story is told. Wholesale auctions strip away the polish, the markups, and the sales pitches. They show exactly what buyers are willing to pay when the pressure's on, and right now, the numbers coming out of these lanes are sending shockwaves through the industry. Every week, RVs roll across auction blocks across the country, and what they're fetching is a far cry from retail pricing. Many units are selling for 30 to 50% less than they were just 2 years ago. In some cases, it's even worse. And each time a motorhome or fifth wheel gets sold below expectations, it drags down the market value for every similar unit out there. This isn't speculation, it's data. Dealers and lenders alike watch these results closely because auction prices are the fastest and most brutally honest indicators of where the market really stands. When values tank at auction, banks get nervous. They tighten lending. Dealers are forced to lower prices. It becomes a vicious cycle of falling value and rising risk. Private sellers are getting blindsided. They list their RVs based on outdated expectations, only to find buyers waiving auction comps and demanding huge discounts. Even rigs in great condition aren't safe once the market has recalibrated. The retail market lags behind wholesale, but it always catches up. Dealers attending these auctions are making tough calls. Some are dumping inventory at a loss just to generate cash. Others are holding back, hoping the market stabilizes. But the ones that move product are setting the new floor, and it's getting lower by the week. Auctions don't care about hope or emotion. They run on supply, demand, and hard bids. And right now, the bids are sending a clear message. The RV market is in a steep decline, and nobody is paying what they used to. If you want to know what an RV is really worth today, skip the lot and look at the auction block. That's where the truth is being told. There's a tidal wave of used RVs hitting the market. and it's one of the biggest reasons prices are dropping so fast. This flood didn't happen overnight. It's the result of multiple forces converging at the same time, all pouring supply into an already saturated system. First are the families who bought during the pandemic boom. Many stretched their budgets to buy travel trailers, fifth wheels, or motorhomes, thinking they were investing in a new lifestyle. But as fuel prices rose, campground costs soared, and inflation hit hard, those rigs turned into burdens. Now many of those same owners are desperate to unload them, often at a loss. Then you've got the rental fleets. During the peak years, companies held on to every available unit to meet surging demand. But that demand has dropped significantly, and now those fleets are being liquidated in bulk. Entire lots of identical units are showing up at auctions and online, dragging down values even faster. Leases are another hidden factor. Many RVs were leased in 2020 and 2021, with terms now coming to an end. Those lease returns are adding more units to the pile, and most of them are hitting the market all at once. Lenders are trying to sell off the returns, but with so much competition, prices keep falling. Repossessions are quietly adding even more pressure. As economic conditions tighten and interest rates climb, more owners are falling behind on payments. When the repo truck shows up, that unit is headed to auction, where it will sell for whatever it can get, adding to the downward spiral in pricing. This isn't just a market correction, it's an inventory crisis. With millions of used RVs re-entering the market at the same time, the supply has far outpaced demand. Dealers can't keep up. Buyers are overwhelmed with choices. And sellers, especially private ones, are finding it nearly impossible to get fair value. This flood of inventory is not slowing down. It's forcing prices lower, shaking buyer confidence, and reshaping the entire RV market in real time. Anyone trying to sell now is fighting a current that's only getting stronger. In the middle of this collapsing market, a more hidden threat is quietly spreading: zombie RVs. These are rigs that look fine on the outside but are damaged beyond repair on the inside. And in today's climate of mass liquidation and desperate sellers, these ticking time bombs are slipping through the cracks faster than ever. Zombie RVs often come from flood zones, hurricanes, and severe storm damage. They've been waterlogged, abandoned, or improperly stored. But with a little polish and paperwork cleanup, they're put back on the market like nothing ever happened. Titles get scrubbed, carpets replaced, and a fresh coat of wax hides the real damage underneath. Unsuspecting buyers walk away thinking they've scored a great deal, only to find mold, rotted floors, or corroded wiring months later. The current flood of used inventory makes it easier for these rigs to sneak through unnoticed. Dealers and flippers under pressure to move stock quickly may skip proper inspections, or worse, turn a blind eye to known problems. Auction houses are moving massive volumes of inventory, and many buyers don't have the time or ability to deeply inspect what they're getting. It's the perfect storm for bad units to spread undetected. The danger here isn't just financial, it's also personal. Mold spores hiding in walls can create health issues. Rotten brake lines and corroded electrical systems can cause accidents. And once these problems show up, repairs often cost more than the RV is worth. Unfortunately, buyers can't rely on a clean title alone. A rig with a perfect-looking history might have spent weeks underwater. In this environment, full inspections by independent professionals are not just smart, they're absolutely necessary. The zombie RV issue is the dark underbelly of a collapsing market. As sellers scramble to unload inventory and buyers chase bargains, the risk of getting stuck with a dangerous lemon has never been higher. The signs are there. You just have to look closely before you sign anything. Because when the dealer's gone and the auction is over, you're the one stuck paying for the mistake. While the entire RV market is feeling the pain, it's the luxury segment that's getting hit hardest. Class A motorhomes, diesel pushers, and high-end fifth wheels that once sold for well over $200,000 are now depreciating at a pace few saw coming. What used to be a symbol of freedom and success has turned into a financial anchor dragging owners under. During the boom, luxury RVs were in hot demand. Wealthier buyers rushed to upgrade their lifestyle, and some even treated RV purchases as investments. Manufacturers couldn't build them fast enough, and dealers added markup after markup, confident they'd sell. Many units were custom-ordered with high-end features, full residential amenities, and massive sticker prices. But now, those same units are sitting on lots for months, unsold, unwanted, and dropping in value with every passing week. High fuel costs, rising maintenance expenses, and brutal financing terms have all pushed buyers away from these big rigs. And with so much high-end inventory flooding the market, even lightly used coaches are losing tens of thousands in value almost overnight. Owners are in a bind. They owe more than the rig is worth. Refinancing isn't an option, and buyers looking for deals are pushing for deep discounts. Even private sellers with spotless, low-mileage units can't get close to what they paid. Meanwhile, the longer these luxury RVs sit, the more they cost in storage, upkeep, and depreciation. Dealers are panicking too. Each luxury unit on the lot carries a huge floor plan debt, and the carrying costs are crushing. Some are resorting to fire sale pricing just to keep the lights on. The ripple effect hits the whole market, dragging down resale values across all classes. In this crash, the rule is clear. The higher the original price tag, the harder the fall. Luxury RVs were the first to rise during the boom, and now they're the first to sink. For owners, it's a brutal reversal. For buyers with cash and timing, it might be a rare opportunity, but only if they know what to look for. The RV crash is not playing out the same everywhere. There's a clear divide between what's happening in urban markets and what's unfolding in rural areas. And understanding that difference explains a lot about where prices are going and who's getting hit the hardest. In major cities, the collapse came early and fast. Dealers in metro areas were the first to feel the pressure as demand dried up and lots filled with unsold inventory. City buyers had more alternatives: public transit, rideshare, and compact living, and many simply walked away from the RV lifestyle once the novelty wore off. To move product, dealers slashed prices aggressively, offered steep incentives, and raced each other to the bottom. Volume mattered more than margin. But in rural areas, the story was different at first. RV culture runs deeper in small towns, and people rely on their vehicles more heavily. Early on, sales stayed steady, and prices held. That gave many the impression that rural markets were immune to the downturn. Now that illusion is crumbling. As credit tightens and local economies feel the pinch, rural dealers are seeing sharp drops in foot traffic and financing approvals. Small towns often have fewer buyers, fewer lenders, and fewer service shops. That means when things slow down, there's nowhere to turn. Once inventory starts backing up, there's no easy way to offload it. Prices start falling, and keep falling. The economic ripple is deeper too. Many rural communities rely heavily on RV-related jobs, manufacturing, service, sales, or parts. When dealerships suffer, those jobs disappear. Layoffs at factories hit local diners, gas stations, and campgrounds. Entire towns built around RV commerce start to feel the strain. In short, cities got hit first, but rural America is set to fall harder. There's less liquidity, less buyer demand, and fewer safety nets. And when the downturn fully hits those markets, recovery will be slow and painful. This split between urban and rural isn't just a geographic story, it's a warning. If you live in a small town and think the RV crash won't reach you, think again. The wave is already building, and when it hits, it could change your market overnight. In today's collapsing RV market, one group has emerged with all the leverage: cash buyers. As financing becomes harder to secure and dealers scramble to cover their losses, buyers who show up with cash in hand are calling the shots like never before. It all starts with the financing chokehold. Interest rates have climbed steeply, making long-term loans far more expensive. Banks are pulling back on lending, raising credit score requirements, demanding larger down payments, and even turning down applications for seemingly qualified buyers. That has left a massive gap between what people want to pay and what lenders are willing to support. And dealers, stuck with rising inventory and rising floor plan debt, are desperate for liquidity. Enter the cash buyer. For those with savings, inheritance money, or liquid assets, this market has become a playground. Walk onto a dealer's lot with a checkbook and you immediately have more power than you might have thought possible. You can negotiate harder, demand more extras, and walk away from any deal that doesn't feel right. Because the dealer needs you more than you need them. It's not just about haggling on price. Many dealers will now throw in extended warranties, towing packages, upgrades, or even cover delivery fees just to get a deal done. They know that each day a rig sits on the lot, it's costing them money. Floor plan interest accrues daily, and unsold units tie up precious credit lines. Selling to a cash buyer means they can clear a unit instantly, free up that credit, and move on. Private sellers are also feeling the pressure. With auctions dragging down values, private listings are sitting longer. When a cash buyer comes along, they often accept lower offers just to avoid more delay, or the risk of future depreciation. And here's the kicker. Cash buyers don't just have financial power. They have timing power. They can strike when desperation is highest, when most other buyers are waiting on loan approvals or stuck negotiating with banks. That ability to act fast gives them access to deals others never even see. In a stable market, cash is convenient. In a crashing market, cash is everything. It's not just a way to pay, it's a weapon. And right now, it's the sharpest one out there. If you're in a position to pay cash, this is your time. But even if you're not, understanding the power dynamic can help you negotiate smarter, time your move better, and recognize when the market is handing you leverage you didn't have before.
Timing the bottom of a collapsing market is like trying to catch a falling knife. But if you do it right, the reward can be massive. In today's RV landscape, values are plunging, dealers are panicking, and buyers are standing on the sidelines wondering, is now the time to buy or should I wait? The truth is, the bottom doesn't announce itself. It doesn't come with a news headline or a flashing light. It shows up quietly, when panic reaches its peak, when inventory is overflowing, and when dealers are making the deepest cuts just to survive. If you're watching closely, there are signals that can tell you the market is near its floor. One of the most telling indicators is auction clearance rates. When dealers and banks start accepting lowball bids just to offload stock, that's a sign the pressure has hit critical mass. If units are selling under reserve prices, it means holding out is no longer an option, and that's when buyers can swoop in. Another clue is dealer behavior. If you're seeing multiple lots offering steep discounts, bundling in incentives, or listing inventory with language like "must go now" or "no reasonable offer refused," you're getting close. When profit margins no longer matter and cash flow becomes the priority, the market is approaching bottom. But you also have to watch the financing environment. If lenders are still writing loans during peak desperation, you've hit a sweet spot. That narrow window, where dealers are slashing prices and banks haven't yet pulled back entirely, is where the best deals are made. Wait too long, and you risk missing that window altogether as inventory clears and prices stabilize. Patience is key, but so is readiness. The biggest mistake buyers make is waiting too long. They try to time it perfectly, only to see the market turn while they're still thinking it over. The best strategy is to know what you want, get prepped with either cash or pre-approval, and pounce the moment the indicators align. Keep in mind, not all rigs will recover equally. High-end motorhomes may continue to lose value long after mid-tier trailers rebound. Regional factors also matter. Some rural markets will bottom out later than metro areas. So watch your local market closely, check recent sales data, and talk to multiple dealers to get the full picture. In a downturn, fortune favors the prepared, not the impatient, and not the hesitant. Time it right, and this crash becomes your opportunity. Time it wrong, and you'll be stuck paying tomorrow's prices for yesterday's mistake.
Thanks for watching. The RV market is going through some big changes, and understanding what's happening can help you make smarter decisions, whether you're buying, selling, or just keeping an eye on the trends. If this video helped you, go ahead and hit the like button. It really supports the channel. Share your thoughts in the comments, especially if you've seen prices shift in your area or if you're dealing with any of the issues we talked about. And if you want to stay updated on everything happening in the RV world, make sure to subscribe. I'll keep bringing you honest, no-nonsense breakdowns to help you stay ahead. See you in the next one.